When it comes to NAFTA right now, can we actually have a better NAFTA deal after all this is said and done?
Well, I don't know how much better it will be overall. I think it'll be good to get a revised agreement in place. There are a lot of new provisions in there that are going to be beneficial. It updates the NAFTA in areas like e-commerce, the digital economy, a lot of customs-related things that were still irritants in the North American relationship. You know, we're still concerned about some of the language that has been discussed between Mexico and the U.S., but overall, I think it's an acceptable deal that the two have. The main concern to us is, without it being a three-way agreement that includes Canada, then, you know, from a U.S. business perspective, it's very problematic. We need to have the entire North American economy covered by this agreement. We now have an integrated global production system in North America, and we need that to compete with Europe and Asia. So hopefully they can get Canada on board. I think there are still some real sticking points, but we're hoping they can work it out.
The Prime Minister, Justin Trudeau of Canada, is saying that no deal is better than a bad NAFTA deal. Is it worth giving up the whole deal for Canada, given just how much NAFTA has really benefited the country over the years?
I think the Canadians will have trouble walking away from any deal. I think, obviously, if the deal has too many, poison pills in it for the Canadians, they're going to delay agreeing to that and continue to negotiate. But, it's not clear what happens if Canada and the U.S. are deadlocked. The Congress is making it pretty clear, and this is certainly a position we support in the business community, that Canada has to be on board, that it has to be a three-way deal. And I think the president would have a very difficult time trying to propose a purely U.S.-Mexico deal to the Congress and get them to accept that, and at the same time have free trade between U.S. and Canada go down the drain. I don't think that's a conceivable outcome. So we'll have to see.
Rufus, Kathleen Hayes here in New York. I'm wondering about I want to show up a chart from Bloomberg Library, because it makes a really powerful point that I think it's parallel to what the point we make about China is. We see these white bars that are Canada exports to the United States, and then we see these little blue bars down below, which are U.S. exports to Canada. And it goes from 2007 all the way through 2017. They look pretty constant. Point being, who's more dependent on whom when it comes to this kind of a deal? Does Canada have more to lose in this if for some reason Justin Trudeau says, well, we'd rather have no deal than a bad deal?
Well, I think, though, I can't see the chart very clearly, but I think those bars are based on their exports as a percent of their total exports, and same for the U.S. Obviously, Canada's exports to the U.S. are a huge majority of their total exports, whereas the U.S. is much less dependent, although let's remember, Canada is, I think, our second largest export market. It's very important, or maybe our largest. It may be ahead of Mexico. The point being, the U.S. exports all over the world. Canada is more dependent on the U.S., that's true. But my point is that the U.S. is also dependent on an integrated North American production economy in order to compete with Europe and Asia. And for us now to pull that apart, it's going to be harmful to industries like our auto industry, which has had such a resurgence and which is doing so well now. We have cross-border supply chains. We have integrated production factories, and you can't pull that all apart. At the same time, we export a lot of agriculture to both Canada and Mexico. Yeah, we have complaints about some of Canada's agricultural restrictions, but we still have major agricultural exports to Mexico and to Canada, and we don't want to see those disrupted. So overall, it's still a good relationship.